Today, we're going to be talking about home and auto insurance and why carriers are seeing significant rate changes. I hope you enjoy. We're seeing a lot of change in the insurance industry right now, and it's causing a number of questions to come up. And I thought it might be appropriate to discuss that as it relates to what's going on in the industry. Where we're at right now in the industry is what's called a hard market. And we're talking about home and auto insurance. And basically what that means is loss ratios have deteriorated. And with insurance companies, what will happen is their appetite to take on risk will decline because their numbers are basically out of line. So if you think about insurance, it's all based on the law of large numbers. And if we start with, let's say, automobile insurance, with auto insurance, insurance companies know, based on the type of vehicle or the statistics that they have, they know on average what size claim on average. Now they're averaging everything out, but they know what the average size claim will be per claim. And then they also know things like the type of vehicle, what frequency of, what's the term I'm trying to use? How frequently is that particular vehicle in an accident? And all of those things come together to ultimately develop a premium that they need to charge so that they can meet their obligations, pay their claims, and still be profitable. Now, I don't know about you, but I want an insurance company I'm dealing with to be profitable, because if they're not profitable and they're not profitable long enough, they go out of business, which means they can't pay the claims or the promises, meet the obligations that they have made with me. So what they're looking at whenever we get into this hard market is they will typically restrict their underwriting, maybe restrict some coverages until they can get things lined up. So taking the auto insurance, why are these things out of line? Why are we in a hard market? Well, if you think about the economy, first of all, everything from a pricing perspective has gone up. And with the supply chain issues that are occurring, take an auto claim, for instance. You've got a number of factors going on. One is whenever a vehicle is damaged, frequently it takes longer to get the part in. Well, if it takes longer for the body shop to get the part in, it might be that the insurance company is paying rental for a longer period of time if you have rental reimbursement. As it relates to the part itself, the part now is more expensive. So because of inflation and supply chain issues, the fact that supply and demand changes and affects price, it's more expensive to buy those parts to put on the vehicle. And then the labor to install it is more expensive also. All of this takes the overall average claim size to a higher number. When that goes up to a higher number, that adjusts then what the overall loss ratios are. So then the insurance companies have to adjust to that. And then if we think about homeowners and homeowners insurance, we've got a number of factors. First of all, of course, you got the cost of building. Anybody can look around and see there's been a significant change in the cost to build houses, the cost of construction. So with an insurance company, whenever they're dealing with homeowners insurance, of course, they're always, if it's replacement cost, they're trying to keep the value of the house or the insured amount at or near what that replacement value is, so that if you have a total loss, they can make you whole. Well, that in and of itself is going to make premiums change, because when you get a renewal, you may notice that your coverage increased. But beyond that, beyond just that fact there, same issues they're dealing with as we are on the auto side. So your cost of material has increased dramatically. The supply chain issues have caused those things to get pushed up. Labor costs have increased significantly. So when the insurance company is looking at their homeowners, and they do the same thing, they know what their average size claim is. They know what the average frequency of every so many policies they have insured, how many how frequently a claim will occur, what the average size is. As those numbers get out of whack, then we enter a hard market. Everything tightens up until they can get things adjusted and adjusted properly. And the way they have to adjust them is adjusting the pricing based on what the new average claim size is, and then all these other things that get factored in. So we're getting a lot of questions about that, which is why I thought this might be an appropriate time to distribute this, and it helps people understand. I'm like anybody else. I don't like to see rate increases. I have to pay them just like everybody else does. That being said, being on the side of the fence that I am, I also want to know that that insurance company that I have my home and auto placed with, that they're financially sound so that they can meet those obligations and pay those claims when I call them to report a claim. So if you have questions about home, auto, anything along this line, any kind of risk management, don't hesitate to call Terry or myself here at Westside Advisors and Insurance Services. I hope you have a great week.